Hello, hello, everyone. I hope you're doing well. Another Friday, and we are going to analyze the market. We're going to talk about Euro USD, uh, oil, Dow Jones, and gold. In the previous week, we talked about the chaotic situation happening in the Middle East. Uh, the situation is still the same, and the politicians, the important people are talking about the atmosphere and the conditions of the Middle East, especially the situation that we have been witnessing in Iran since the previous month. And I believe that the fluctuations that we see in the market, especially on gold and oil, uh, all these things are related to the incidents uh, that we are seeing in Iran. Uh, Today, I'm going to start my analysis and forecasting with Euro USD. Here's the daily chart of Euro USD. As you can see, the price is on a in a bullish channel. It is in the middle of the channel. Since the bullish leg was so strong, the first bullish leg after this trading range, and as you see, the bull candle has been closed far above the previous top. So I assume that the bulls are going to take the price higher, maybe to the top of the channel, or at least the top of the bull leg. So the people who took a trade here would be able to exit their trades break even, and the people who scaled in around here or here will be able to take some profit at this point. Or some people who believe that we are still in a bullish move, uh, we are going to uh, see another leg up. It is a little bit suspicious to me because the bear leg that we witnessed in the previous weeks was a little bit uh, stronger than uh, the other scenarios. Many people believe that, yeah, we are going to have a correction on gold or Euro USD or any other asset. Most of the assets witnessed a correction. But here on Euro USD, you can see the correction has been much stronger than the other corrections. Look at this correction, very sharp. Look at this one, not as sharp as this one. Look at this one, sharp, but after that, rejection, very strong bull candle, and then another leg up. But here, you can see a very huge drop, but after that, the bulls were not confident to buy. Yeah, after the second signal bar, they bought, but again, uh, you can see the in uh, convenience in the bulls buying high, they're scalping their positions. Uh, but I believe uh, at the end of the day, we are going to witness another leg up instead of another leg down. But it's not gonna be as easy as before. You can see leg up, leg down, and then leg up, then leg down, again leg up. It's gonna be another leg up, but it's not gonna be that easy. Birds try to take the price lower, maybe to the bottom of the bull channel. It can be an expectation. So to me, for your USC, another leg up is expected, uh, but you need to uh, look for confirmations before you take the trade. And for the people who trade on lower time frames, for example, on the 1 hour chart, you can see the leg up that we've been talking about, and the correction. It is in a triangle. Can you see the triangle? Yeah. And we need to wait for the triangle to break. For 50%, we are going to witness another leg up if the breakout is from the top, or vice versa. For 50%, we're going to witness the price drop if the breakout is from the bottom. But before that, we need to wait, because right now the price is in a tight trading range, a trading range that is becoming tighter and tighter. And yeah, the odds uh, are 50-50 for both sides, because the price has been in a trading range for many bars. So the influence of the bear leg and the influence of the bull leg have been kind of indifferent for both buyers and sellers. So here we can expect anything to happen at this point, because the strength of both parties is the same, and they're going to try to win. And we should sit down and see what's going to happen in the following hours. Oil. Look at the chart. This is the West Texas oil. As you see, and as we had predicted before, the price is going to experience a rejection at the top of the trading range. Here's our trading range's top. If you want to consider this low as the low of the trading range, which is correct, you can see the rejection from this level, first signal, second signal. So this level is important, and you can, if you consider this level or this top as the uh, top of the trading range, or this one, no difference here. You can see the rejection from this level as well. I would put my line on this top, because it is the first rejection, the first drop on my chart right now. And you can see the price pulled back to this top and then dropped. So it is the level that made this price action. and the same scenario for the bottom of the trading range. And you can see it is working perfectly. See, look at the rejection here. If I put my line above this top, I wouldn't be able to see this rejection. But let me tell you something. The lines are not perfect. Okay, you have to draw many lines to see if the market has reactions to that or not. And when you see, okay, for example, a line uh, hasn't been as useful as you believed, you can simply eliminate that line. So you can see this line was not touched before it dropped. So I deleted. And you can see the rejection from here and another reaction to the moving average 20 EMA and another bear bar is being formed. Uh, maybe we are going to witness a correction or a leg down because it's a trading range. It is possible. Uh, what does the fundamental news say about the next move of oil? Tell me uh, about the next move of oil in the comments. Uh, let's talk about it in the comments. But I believe it is directly connected to the situation in the Middle East right now. And due to some sanctions on Iran's oil, the demand for oil has increased because the distribution has decreased. So it is one of the reasons that has made the oil price uh, rise. And I believe if this situation continues, we are going to witness higher prices for oil. But the price action is supporting um, the idea right now. Everyone is confused. No one knows about the final decisions of the politicians about Iran. So the traders are confused as well. See, you can see a lot of confusion here. Uh, Bull bar, bear bar, tails, top and bottom. Again, bear bar, doji, bull bar, but tail above, bear bar, another doji is being formed. So you can see a lot of confusion and a lot of confusion price action on the chart. It shows uh, a lot of uh, uncertainty that the traders have regarding the oil price. Uh, if we consider this move a triangle, again we need to wait for the triangle to break. For now, I will sell. If anything, I will sell because it's a huge uh, bear bar closing at its low, and the next bar is going to be bearish if the selling pressure continues. And if it does, we can expect another leg down. However, uh, the buyers know that uh, it's trading range and the bears are not going to hold on to their positions, so they will scalp their positions. They will take out with smaller profits because they're not confident for another leg down or maybe a bear trend. So both bears and bulls are uncertain and they're not confident. Uh, so it creates more trading range price action, which is coming from confusion. And for the people who trade on lower time frames, for example, on the 1 hour chart, that is this line is the top of the trading range. You can see the perfect pin bar, although a bull bar, but tail above a big tail above the bull bar that shows the rejection, and then a perfect entry bar, uh, first leg down, a mere pullback, another sharp drop, and then um, trading range price action, another drop and rejection here. And it is the bottom of the triangle on our daily chart. So if I minimize the chart, you can see the triangle pretty easier. See, it is our triangle here. The odds on the hourly chart are in favor of the birds because of this strong drop, but never forget that it can be simply a vacuum, a magnet to this low. So if the bulls start buying at this low for two reasons: first, it is still bullish, uh, first leg pullback, second leg uh, higher low, and then higher low, then higher low. And this is the very first time that the price went below the low. So if you consider this one a major low, uh, it can be a major low, or some people consider this low as a major low, since the other highs after these lows didn't go above the major high here. So if you consider this a major high, this high didn't go above this high either, and this high either. So you can see higher high compared to this high, higher high compared to this high, and lower low compared to this low. Already trading range price action. So the bears and bulls know that uh, both of them are going to take out their profits uh, sooner than expected, because they're not confident uh, that the price is going to go very far, no matter to which direction. Here, as I said, we are in a triangle and we need to wait for the triangle to break. If it breaks downside, another leg down will be predicted, and expected. But if they couldn't do that, if, as I said, this low, it can be just like this area, from this low to this low to this low, and then you can see the rejection. So this low has been valid so far. So if this low holds, meaning the bears couldn't take the price lower than this low, and then establishes below this low for another leg down, if the sellers doesn't do that, the probability for the bulls to be able to take the price to the top of the triangle for another leg up, at least to 50% of this drop is valid. So you can consider that scalp on the 1 hour chart, which is a swing trade on lower time frames because of the number of ticks and pips here. So unlike EURUSD, that I was more confident that the bulls are going to take the price higher for 60%. At least for oil, I'm not that much confident. I need more confirmation for that. And after that, we can decide better to see if the birds or bulls are going to succeed or not. Dow Jones, very interesting on the 1 hour chart. So let's look at it on the daily chart. If you remember, I had been saying that since the price is in a tight bull channel, it is more probable for the price to create another higher high that occurred. This thing occurred last week. See, a very, very big bar, and it's far above this top, this top, this top, and this top. So the strongest, you can say, the strongest bull bar among all these bull bars, and the biggest bar among all these bars. Look at these bars. None of them is as big as this one, this bull bar. And when something like this happens after a long time, after the trend is old, it is considered as an exhaustion gap, meaning the price is exhausted, it is tired, the trend is tired, and it is the last and strongest attempt for the bull to create another higher high that happened, say, a higher high far above this one. And then you can see the uncertainty. That's why it is called an exhaustion gap, because there is no follow through bar here. See, if we saw another bull bar here after this bullish bar, a trend bar, big, huge trend bar, if we saw another bull bar after this bar, we could consider that bar a follow through bar. But here, after a very big bar, what do we have? A doji bar in bear, and then another doji bar in bull, and then another doji bar in bear. So confusion. It shows confusion. It shows that for 3 days, the bears and bulls were in confusion. And then the drop happened from the bottom. So it shows that this bar was an exhaustion gap that shows the price has been tired and it doesn't have the tendency to go higher this as strongly as it was when this bar was being formed. Do you understand? And here you can see the same price action after each top. Look at this top, bear bar. What about this top, bear bar? What about this top, bear bar? What about this top, bear bar? So the market has been doing what it's been doing. It's a very interesting sentence. Market has inertia, meaning it likes to continue to do what it's been doing. So if it's in a trend, so for 80%, most of the tops fail and the price goes higher, and the same pattern uh, will be repeated. Do you understand what I mean? Here you can see, actually, we have talked about Dow Jones before. It's in a very strong bull channel, and right now it is correcting itself. If this low, if the price goes below this low, or it's better to say this low, it shows that the bulls are not as strong as before. See, look at this low, look at this low, this one, and even this one. Higher lows, higher lows, higher lows, higher lows. So it shows that even here we have macro higher highs and higher lows here. See, it is a macro higher low, higher low, higher low. So even here you can see macro higher lows. And if you consider these micro lows as one single low, all of them, this low is even higher than this low. So it shows that the bulls are still in control. But my prediction is, it is not a prediction, it's a guess. It's a wild guess. If the price goes below this low, we can conclude that the bulls are not as strong as before. And the price has been in a strong bull leg in a trend for about, yeah, since April 2025. Yeah. Yeah, or the breakout, you can consider the breakout that happened on the 9th of April 2025. And it's been more than 200 bars, almost 220 bars. So, trading year, one trading year, almost. So, I believe that a correction will occur. I don't know when, but it is very probable to happen because I can see that the bears are making money as well. Not as easily as the bulls, but they're making money. Here they made money, here they made money, here and here. Not here, but here and also here. So a correction is probable, in my opinion. And for the people, uh, but I'm, but my lessons about the daily chart, I'm not going to say. I don't mean that we are going to witness a correction. Maybe yes, maybe we are going to in a short period of time, but it doesn't mean that it's gonna happen very soon. Maybe we are going to witness another leg up, and then two legs up, and then the correction happens maybe from here, but the correction will occur soon for 70%, for 60 to 70%, for 20 to 40%. Okay, the breakout will be from the top, and another phase will begin. Okay, it has happened in the history of Dow Jones for many times. Yeah. Let me show you one of the examples. Uh, see here, you can see the many people, for example, you don't have the right side of the chart. Many people believe that, okay, very sharp drop, and then it's in a bull channel, which is a bear flag. So the odds we're going to have at least one leg down. Uh, Maybe we're going to see the resumption of the trend. First leg pullback, second leg. But guess what happened? A breakout and then resumption, and then another trend occurred. So it has become a wider and stronger uh, trend. Yeah, but you can see the correction here after many bars. So uh, it is time that is the issue. Yeah, most of the time we understand what the price is going to do, but the time matters as well. So we need to sit down and see what the price is going to do. And for the people who trade on lower time frames, the odds are in favor of bears after these two huge bear bars. And look at the tight channel, very weak and very confused, but still strong and in favor of the bears. Look at these two bars, very strong, close at their high, but look what happened. A very strong bear bar closed below the low of the first bull bar. Let me zoom in. You can, you can see better. See, this low is below this low. So it shows that the bears are still in control, and you can see a very weak, tight bear channel. Yeah, just two bodies. The rest are doji bars, just this one and this one, that are bear bars closing at their low. Just these two have bodies. The others are dojis. Yeah, tail above, doji, doji, dojis, dojis. Yeah, and this one is still a body, but we should see what's gonna happen in the next hour. And the New York session is open now, so we can sit down and see what's gonna happen to Dow Jones. To me, another leg down is possible, but since this channel is very big, and I believe the influence of bears is not as strong as it used to be when the price was here. Both bulls and bears could uh, be in control at this moment in the few hours, but in total, I believe another leg down is possible, but I'm not that much confident. It is kind of 50-50 because we are at the top of almost at the top of the uh, major top here, and you can see the major top here. Yeah, and another area here. So this area is a very strong area. You can see the pullback to this top and then another leg down and very big follow through trend. Maybe it's gonna test this area again. Maybe it's going to test the moving average and another leg down will occur. We should sit down and see. But in technical analysis perspectives, the odds are in favor of the bears because of these two huge bear bars. The third one, also a trend bar closing at its low, and then another pullback. That is another strong bear bar closing at its low. So odds are in favor of bears, but bulls are buying as well because it's all in all, it's a very big trading range. So people do not hold on to their positions. They try to scalp out their positions to save their profits. And finally, my favorite asset, gold. Gold has been in a tight bull channel. And then I believe that you remember this bar last week. And look at the bar, very strong. Another leg down, maybe, if you consider this the first leg, or some people just consider it the first leg. And look at the gap opened. It shows the strength of the sellers, but tails below, and you can see the rejection from this low, which is around the major low. So why it reversed from here? Because when you are in a bull channel, it doesn't matter in a bull channel or in a bear channel, the major participants of that market try to protect their major areas. For example, for bulls, a bull trend needs higher lows more than higher highs. Lows are more important in a bull trend, and oppositely, the highs of a trend are more important in a bear trend than their lows. So here you can see lower high. Here we have a high, and this high is lower than this high. But see, this low didn't go below this low. So it's still a bull trend, although you do not see a bull trend. Maybe just see, okay, a very strong move up, um, correction, one leg pullback, second leg, or simply one leg pullback. And the people who wanted to go for another leg down got trapped because they didn't consider the fact that we are in a bull channel. And in a bull channel, the bulls protect their lows. And this happened here as well. See, leg down. So here's the low, and then another leg up, another leg up, another leg up. You can consider this one as one leg and then another leg, or simply you can consider this move a leg and then drop to the previous major leg. Why didn't I consider this low? Because it is not a major low. It is. Look at the depth of the correction. Here, the correction is not that deep. So it means that here the bears were not in control. So I do not consider this low as a major low. But here I consider this one because among these bars, especially from here to here, none of them were as strong as this one. So it is a deep pullback, at least compared to the previous ones. So I do not expect the bears take the price to below this low if I believe it's a bull trend. And if it happens, it is not a bull trend anymore. It's a trading range or the beginning of a bear trend. And here it shows that we are still in a bull trend because this low didn't go below this low. and it is playing here. So see, a trading range. So you can consider this high as the first top of the trading range, and this low or this low as the bottom. But since there aren't many bars in the trading range, this trading range can be easily a resumption pattern, a reversal pattern, let's say, um, because many still believe that uh, the bears are in control. The bulls couldn't take the price to the top of the bull channel. Some people believe that gold will reach this top eventually. Some people just look at the price uh, and just see this pattern like a triangle, uh, not very perfect, but you can consider this a trend line as well. So if it closes below this line and establishes, uh, the odds will be in favor of the bears for another leg down, at least to the bottom of this low, or maybe lower if it continues. But since it's a daily chart, it's a gold daily chart. Uh, for such a move, you need a lot of fundamental support here. So it is not only price action. Yes, it happens, but it takes too long to do so. For something like this, something fundamental, something related to something else outside the chart is required. So to me, um, since it's in a bull trend, we are still bullish, but it is not very wise to buy high or in the middle of the channel. If you draw the lines of the channel here, let me draw the channel lines. Can you see the rejection here? So it shows that my line has worked pretty well, and it is the top of the channel. You can see the breakout, and then the breakout failed. And see, you are in the middle of a bull channel. The channel is not that much wide, so it shows that the bulls are so strong, still strong. But I would rather buy low and sell high. Maybe I'm not gonna sell when the channel is this tight. Maybe I would. It depends on the strength of the bears, but I would consider selling when the price is around this top, and I would consider to buy when the price is around this low or at least at the bottom of the channel, which is here. So at these areas I will buy, and at this area I will sell, and the price is in the middle. And if I was a trader who's trading on a daily chart, I wouldn't take this signal, and I would wait for better options and entries. But for the people who trade on lower time frames, for example, on the hourly time frames, such as the 1 hour chart, see, look at the tight trading range and then drop, the drop rejected, and it went back to the moving average to test the moving average. But here it is still in a tight trading range. It is a tight trading range. Okay, so from one range to another range. And to me, it's better not to trade now. You should wait for the price to become more clear. For me, it is not clear. If I wanted to trade, I would scalp. I wouldn't go for any swing trades. If I wanted to take a position to swing trade, I would take this one or this one, here this one, because of the price action and the rejections from the bottom, and then a very good entry bar with another follow through. So here I would buy, here I would buy, first leg up, pull back, second leg up. So I would buy here. I would sell at tops when I see the uh, weakness of the balls. See, you can see the weaknesses of balls here. Gap up, bad follow through, trading range, another breakout from the top, double top, and then dropped. It dropped again. Another higher high, dropped again. Higher low, sorry, lower high, higher high, lower high, higher low to this, and another higher low. So triangle. Look at the triangle, and the triangle expanded. See, the triangle expanded, and then it broke from here or even here, and you can see the people who could trade this pattern, they were profitable. And for the people who took this trade on lower time frames, let's see if we could find better entries. Look at the sharp drop, and even on the 5-minute chart, see, very sharp drop, very sharp drop. But you can see the pullback to the moving average, another leg down, another leg down, another leg down. Yeah, but right now it is not obvious, so you cannot read the chart. If you cannot read the chart, you should wait. And the price is in a in a trading range. The top could be here, top could be here or here or here, no difference. You can draw your lines to determine which top worked better. Here, this top worked better. See the rejection from this top, not this one. So it dropped to the bottom, and yeah, it is going higher, maybe lower. It's in a trading range, confusion and uncertainty. So we need to wait to see more strength from one of the sides to make our decision to take a position. For now, I do not have any clear uh, mindset about any of the sides, neither bulls nor bears, uh, but we should sit down and see. Uh, for now, yeah, it is 5:20. So yeah, the US Open is on this candle, bullish but tail above in a bull leg, but totally in a trading range. So bears are selling, maybe we're going to witness another leg up from here, or we're going to witness a total um, bear leg to the bottom of the trading range. But for now, it is not obvious, so I do not recommend you to take any positions right now. You should wait for the price to see what it's gonna do at this level or at this level, or if you want to sell, you need to wait to see what the price is going to do at this level or at this level, and then you can make better decisions because we are in a trading range. Okay, that's it. Thank you for your attention. Please tell me what other assets you want me to talk about in the comments. And if you have any suggestions or recommendations to help us provide you with better content, please do not hesitate to let us know. And thank you for your attention. And bye for now.